to another portfolio review. So, currently year to date, we're not doing too bad. As you know, in the last video, we were sitting at around 17, 18,000. I've made a few contributions since then. I've reconsolidated my portfolio since then. I figured that now is a time to go heavier into the growth side, which a lot of people might respectfully disagree with, but I frankly do believe that this year will continue with favorable growth among the growth stocks, whether it's Apple, Amazon, Nvidia. Maybe not Tesla at the moment. If you've seen before, it's taken quite the sell off because it's hasn't really done well on earnings. So I do think that there is a lot of room to grow. Originally, my plan was to conservatively grow the portfolio from 1,200, approximately where I stand, to about 42,000 by the end of 2024, and currently sitting above 29,000. I think that's rather a conservative estimate. So I've upped this to 62,000, and I think that's a more respectable ending portfolio balance for the end of 2024, considering that last August we were sitting at around 1,200. So we are moving extremely quick here, and as long as the market, does its thing, and as long as it continues to perform, I don't think there's going to be a lot of room for quite simply losing money. 2024 will most likely be not the best year for the economy, but it may be a very good year for the stock market. And basically, this is a year to invest as much as you can, in my opinion. I'm investing in more of like the growth side, as I've mentioned below: Amazon, Apple, Nvidia. So this week is a very important week for earnings. As we know, we have Apple, Amazon, Google, a lot of other companies reporting earnings, and more importantly, Apple, which I pretty much care about the most. And I was reading this article. Apple, for its part, will update investors on Thursday, with CEO Tim Cook tasked with challenging the market's current narrative that weakening iPhone demand, particularly in China, will weigh on sales for much of this year. Now, as we've seen that iPhone sales have started to dip off, they have been offering discounts for iPhone sales in China, which is a first for me. I've never really seen sales or discounts on an iPhone. It'd be nice if they offered that discount here in the United States, but I'm wondering, how this would actually portray to, Apple, and what decision actually led them to that. Well, of course, weakening sales in iPhones. But more importantly, I think that with, a little economic slowdown, it's natural that when you offer a discount, and your audience is probably going to see that as a strong incentive to want to buy your iPhone. Analysts are looking for an earnings of $2.09 a share on revenue, for basically equating to $117.87 billion for Apple, but its near long term outlook is likely to be far more important for the stock's performance. The shares are off slightly this month after rising 48% in 2023. Let that marinate into your brain. 48% in 2023. Now, if you held Apple in just the last year alone, you would have been up 48% on your money, which is definitely what happened to me. And of course, I've been averaging my dollar cost and whatnot. But more importantly, I do think that Apple has a lot of long-term potential because it does hold a significant value of the Dow, the S&P 500, the Nasdaq in general. And I don't see it necessarily taking a plunge in 2024. Maybe its stock will not rise 48% again. I doubt that it will. But if it continues to grow this year, it goes up 10%, 20%, that would be awesome. I would take that, to be honest, given the amount of shares that I've accrued in just the last year alone. Amazon. Amazon will round out the top four earnings parade on Thursday after the close of trading, which is wonderful. I always like it when stocks basically release earnings after closing. I've never really been a fan of companies releasing earnings before opening. I don't know, for whatever reason. But Thursday, after close of trading, with analysts expecting the e-commerce giant to likely post record revenue of 166.1 billion, a staggering total powered in part by 13.1 sales growth at Amazon Web Services. Now, I think this is a very important year in our market, given the election, and we have the Feds trying to taper off inflation and whatnot. We have unemployment, we have GDP concerns and growth concerns and whatnot. But I think that Amazon currently at its price offers a lot of value to grow and consistently grow, from basically saying that in this type of market, it is still a dominant figurehead in terms of e-commerce. I mean, just considering, if we were to look at Amazon this year alone, okay, yeah, it's up over 6%, which is a great start to the year. It did break $160 last week, but more importantly, if you look at 2023, okay, it was up over 58%. That's insane. That's more than Apple's growth. But considering that there is what people consider a slowdown in the economy, I would say more importantly, people are still buying things that they probably don't need. And everyone's just looking at that type of website where this thing offers basically anything you could be looking for, and it's just continuing to impress. More importantly, though, the fact that Amazon capped out between the low to mid 180s back during COVID in 2021, this stock's currently sitting at $159. We're only talking about $20 to $25 off its all-time high, and it's rebounded that much. Now, we saw it lose a lot of equity during the sell-off, but more importantly, with how much it's grown back and how much it's been able to consistently, portray its earnings per share in a very favorable sense, I think we can honestly say that Amazon is a great long-term hold, and that's part of the reason why I've been just sacking up more shares, and I don't feel like this $159 is such an expensive price. I mean, if you were to compare it to other tech stocks, but I think this is honestly a steal of a price. Back in January of last year, we're talking literally a year and basically 2, 3 weeks ago, um, Amazon was sitting at $86 a share. And considering how much it's rebounded, I mean, if you're investing in it now, I don't think you can honestly lose money because it's continuing to impress and it's continuing to outperform on expectations. So I think that there's a lot of room for further growth for Amazon. Now, as we know with the chip stocks, if you invested in numerous chip stocks back in 2023, you more than likely made money, whether it was Taiwan Semiconductor, Intel, Dell, Nvidia, AMD, Broadcom, that sort of thing. You probably made money, especially if you even bought near the top, because they are continuing to rally. And this article really kind of hit me though, because it is making me ponder about the idea that will us tech investors, more importantly, chip investors, get burnt? Because a lot of these chip stocks have grown at such an exponential rate. It makes me wonder, where is the top? Where is the very top of the graph, if that makes sense? And considering how much inflow of equity has entered into Nvidia stock, which I am very tech heavy in, it kind of makes you wonder though, can we get burned? But I would say at this point, I'm so far into Nvidia in terms of profit percentage return. I don't think I can really get burned that hard. Nvidia would probably have to lose well over half its market cap in the span of one day for me to even basically lose money. So the fact that we're so far into this now is the fact that, yeah, I'm doubling down on this. But at $613 a share, countless people keep telling me, "Oh my God, that's so expensive of the stock." I said, "Okay, well, Berkshire Hathaway is over half a million a share." But when I look at it in this sense, Nvidia, at one point in time, it sold off from 340-ish a share. It sank all the way down into the low 100s. It almost broke, less than $100 a share. And that's when I really started loading up because I look at this company as, one of the main, it's one of the top dogs in the chip industry. They make the best chips, in my opinion, the best computer chips. And I'm thinking to myself, I said, okay, if I double down on NVIDIA, I said, how far can it really bottom out? And then from there, it basically just V-shaped recovered and it took off so hard, it just did not look back. Now, at $613 a share, do I really think that it's extremely expensive and in overbought territory? I wouldn't say it's not in overbought territory. When you look at the stock itself and how it's well over 50x earnings, a lot of people would say that it's extremely expensive, but my thought process here is when is Nvidia going to split? Because we have seen Nvidia split during COVID. It split 4-1, and then that at the time it was around 600 a share, but it split around 800 a share, and that was the last time when it dropped it back down to about $200 a share. Remember, it rose up to 340, then sold off, and then whatnot. But this time around, I do think that has a lot more support around the stock. And the fact that it's got so much institutional ownership, I don't see Nvidia stock selling off. Now, people have told me it was very expensive at 150 a share, then 2, 3, 4, and 500, and now it's back into the 600 price territory. So, I mean, bottom line is, I mean, this is just one of my smaller holdings of Nvidia before I did my account transfer. Prior, I had about 25 shares, but now, we're trying to double back up. And doubling down on this, I do think that this is going to be a great long term winner. More specifically, I do think that this is going to be a great golden egg that I'm going to be sitting on years from now. Actually, spoken with a few people who used to work in the tech side who did work for different chip competitors and whatnot. I won't mention which companies, but they did say that going back 10, 15, 20 years, NVIDIA hands down is the top dog. It is the best of the best. And they wish they could honestly have worked for NVIDIA because they'd probably be sitting on a lot more money right now. But when it comes down to it, how would you really know when all these companies are just starting out, right? You wouldn't know. Up until when they create reputation, you start analyzing their balance sheets and you look at what they're actually offering to the the market and see how they're actually performing over time. And once we start seeing so much money pumping into this economy, more specifically these chip stocks, then we start to realize that, wow, these stocks really do have something going for them. So my honest bet is that maybe by March, April, May, we may see Nvidia offer a stock split, and obviously that would need shareholder approval, and I would be very much on board for a stock split. And if you're probably questioning what type of stock split, I would say at least a 4-to-1 stock split. Keep in mind, if you were to round this at $600 a share right now, which obviously it's at 613, but we did an initiated 4-to-1 stock split, that would drop the stock down to $150 a share, which is at a very comfortable price range. Now, if you did a 5-to-1, you'd be dropping it down to about a $125 a share, if I'm not mistaken. Um, I'm gonna fact check myself. Close enough, 122. But for the most part, I do think that a lot of these stocks are probably going to be stock splitting this year, whether it's Broadcom, Nvidia. I don't see any of the other chip stocks splitting like Taiwan Semiconductor, AMD. I don't see them. They're not extremely high of a stock price yet. And plus, I've noticed a lot of these stock splits, they usually keep them above the 100 or the $200 level. You don't want to get that stock to go, pretty low. And on another note, though, I don't think that Tesla is out of the race. A lot of people think that Tesla, wow, it's starting to lose its steam. Okay, it had one bad earnings and the stock sold off. And we've seen these heavy swings before, nonetheless. So this is nothing new, matter of fact. So obviously, we're at a decent loss on this side. Obviously, we're in the green for other portfolios, but as of right now, I'm just closely watching Tesla. I'm not going to sell the stock. I have a lot of confidence in Elon and what he's trying to, help Tesla achieve in the future. So more importantly, it's important that, earnings can be very brutal, but more importantly, when you have an idea and you want to put that to fruition, a lot of people may not understand that idea, and especially when you don't hit that earnings mark, people get scared, and emotion causes fear, which causes sell-offs. So we're watching this, and I do think that Tesla will come back even stronger. We're starting to see a lot of revolutionary pieces coming out from Tesla. Cybertruck, we're seeing these robots come out. I don't know how you feel about that, but I don't really know how I feel about that. It's kind of questionable at the moment. So as of right now, I would say we're sitting pretty strong over $29,000 in the portfolio. Like I mentioned before, 42,000 was the original goal by the end of 2024, and I think that's too easy of a goal. So now I'm bumping it to 62,000, and we'll see if we can honestly get there because it's not even end of January yet, and we're already breaking 30,000 soon. So other than that, I hope you guys took benefit from this video. Hope you enjoyed, and as always, happy investing, and I will talk to you guys next time. Take care.